Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and celebrating Thanksgiving. So happy Thanksgiving to everybody. Happy ETHanksgiving in the context of what you're seeing behind me. I wanted to go over the Ethereum chart because I had previously gone over it during Easter, and I thought it would be fun to revisit it on ETHanksgiving and yeah, just kind of reevaluate the thesis, stuff like that. And one thing that I did forget to do before starting this stream is just remind people on X. So I might head over there to do that. And so let's just come over here. And I don't usually do it from here. So 1 second. I'm a little bit rusty. I haven't really streamed too much in a while. But yeah, let's just go over here, explore the channel, go to the live tab, and from this, I can I can get shareable link. Thanksgiving festivities. And so what is the name of it? That is Happy ETHanksgiving Stream. Happy ETHanksgiving Stream. All right, so we've got that on there. And if you do like that, you will get a nice little turkey animation there. So that's pretty cool. But yeah, coming back to the chart, if there are any requests or if anybody in the chat wants to say what they're thankful for, you're welcome to do it. But yeah, let's dive into the Ethereum chart here for ETHanksgiving. And so we're looking here at the weekly chart. This is on the, looks like log scale, but I actually wanted to switch it over to the linear scale. I actually meant to do that before starting. Kind of looks a little bit wonky on the log scale based on how I drew these lines. But yeah, so I'm just going to start the intro over a little bit because I wanted to take this into a little clip and, just make a little happy ETHanksgiving video just to kind of document the journey. So yeah, I'm going to do that. So, hey, what's up? Welcome to DGen Ed, and this, wait, I screwed up. I'm thinking too much. Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and celebrating ETHanksgiving here, looking at the Ethereum chart on the weekly time scale. We got it on the linear y-axis, as this is where I had first developed my thesis on Easter of 2025 when, we were bottoming right around there at the beginning of April, had bottomed, hitting a low of right around $1,400, which happened to correspond with the prior highs over here back at the end of 2017. And then also with the pivot high over here from 2019 to the pivot low from June of 2022. And that's where we get that intersection there. Following that, we've gone up a bunch. I was expecting that we'd be getting to around $8,000 per ETH by the end of the year. So up here, as where we're at now would kind of correspond with being up around 8,000. That has not happened. But one thing that I started to think about this idea of ETHanksgiving is, we got the low right around Easter over here. Maybe we're getting a low right now, right around ETHanksgiving. And so if we do look at these levels that I have drawn up here, got the low from April of 2025 going up to the high here, August of 2025. And we can see that this is a pullback to around the 618, which is around $2,800, which coincidentally happens to be right around my average. And, I have to say, this has been testing my, my confidence, but I feel like it's been restored. And I think that, maybe over here, fake out breakdown below this channel, and we start to move up to reclaim this blue line here, which is the 50-week moving average. And maybe we get to test some of these other levels over here, like the, let's see, the 200-week simple moving average is below us still, and that would be getting to a price of around $2,450. So even if we do go a little bit lower, could be finding some support down there. And I think that definitely breaking above not only the 50-week simple moving average. In blue and in purple, we have the 100-week simple moving average right above us. Both of those right around $3,000. If we can get above to test the 20-week moving average, which that's going to be about 4 to 5 months, I guess. And actually, is that right? Yeah, 4 to 5 months, something like that. That is sitting right around $4,000. And that would be, potentially corresponding with the channel there. So yeah, I am always going to be thinking ETH is at a dip buy zone when it has pulled back some. Just going over to the daily now, so we can look at that, and then we can look at some of those levels, but on the daily time frame. So we can see the 20-day moving average here in light blue. That is at around $3,100. Above that, we nearly have what looks like, kind of a bearish cross potentially forming. The 200-week moving average in red potentially crossing over the one in blue, both of those at around 3,500. So that would suggest, that this is a little bit bearish. We got a shorter time frame moving average, the 20-day moving below the 200 here. We might get the 50 moving below the 200. But, these are lagging indicators, and it could be, we could be seeing a bottom. But one thing I did want to look at is just look at this on the log scale to see, where we have pulled back to. And it looks like we've actually pulled back to and retested the 50% retracement, or the 0.5 retracement there at 2,600. That was tested with a low on Friday, November 21st of, let's see, $2,620. And yeah, we are still putting in lower lows. We are still putting in lower highs. So maybe we don't break out. Maybe we don't go higher. But, I just think it's interesting that the holiday does start with a TH. And if we put an E in front of it, then we've got ourselves a happy little ETHanksgiving. So yeah, I just wanted to go over that just to kind of start this, and I will release that as a clip just to be having some fun, because actually before I switch away from Ethereum, with this on the log scale, let's actually look at the levels up here, because I think we could be going past 8,000 in the new year. Maybe not before the end of the year. That's just about a month away. But we do have this red line and yellow line up here, right around 22,000 up to around 27,000. And if we do switch this over to the weekly, go back in time to see where those originate from. Oops, did not want to move that. We can see that the red line kind of corresponds with, the tops over here from 2017 into 2018, the tops here in 2021. And we do see an intersection with that yellow line. That's around 20,000. And that goes back to the lows, not the exact lows, the approximate lows from 2020, and then the lows over here from June of 2022. And those levels that were being tested as support here, got flipped to resistance, kind of consolidating below there. Didn't quite get up to that yellow line here. Hit a high of right around 4,000, kind of makes sense, before getting rejected again. And then over here, breaking above that, but getting a double top, breaking above that over here, as we can see. And that was when we did hit that high in August of around $4,955.90 based on the data from Coinbase. So yeah, thinking about all of that, I feel like there's a lot of upside for Ethereum. It might just take a little bit more time than what we were expecting. And also, it's been up there. I forgot to mention it. I might just switch this back and switch over to linear. Actually, no, maybe it's easier to read it on the log scale. This tweet from Eric Trump, which came out on February 3rd, he said that in his opinion, if I'm Eric Trump, in my opinion, it's a great time to add ETH. And he said that when the low on the day of February 3rd was $2,150, the high was $2,924.60. And we, have been below that. Today, we hit a low of 2,762. Unless that's the weekly. Let's see. Let's switch this. No, this is the, this is on the weekly. So let's just look at this on the daily and see. What was the low for today? It's now showing Friday, but let's say for Thanksgiving. On Thursday, the low was 2,980. So yeah, I mean, if you did buy the lows on that day, you're up today. Lots of chop though, breaking below it, going above it. And so, I mean, is he right? I have no idea. But I think that, I'm excited about Ethereum. I have a lot of confidence in it. My thesis, but I'm biased. And we got the, let's see, the RSI there and the volume, but I'm not going to go over ETH anymore. I will release that as a clip. And since the market is open tomorrow for a half day, I thought we could go over some data from unusual whales to see if there's anything that stands out. And to be honest, the reason why I wanted to do that on a stream is because I have not done it yet for myself. But before I do that, I'm just going to hold this up to say cheers to you guys. Hopefully you've had a very nice holiday with family, loved ones, friends, whatnot, and have enjoyed some tasty food and good company and all of that. So cheers to you guys. Thanks for being here whenever you're tuning in. And let's look at some data to see what's going on there. And if there are any requests, happy to go over them. I don't see that anybody is currently watching, probably because it's a holiday. But yeah, if there are requests, let me know in the chat. And if you want to say what you're thankful for, you're welcome to say that as well. And I have to say, I'm thankful not only for you guys being here on the channel, watching the content that I produce. Sorry if it, goes up and down, the types of content that I do, the frequency of it, just kind of tough managing this with a life outside of the YouTube and a job and all of that. But I have a lot of fun doing it, and I would like to do it more. I would like it to be my focus in the new year, but I kind of said that last year, so we'll see. And I'm happy for the thesis that I developed on Ethereum. That's just been a really nice experience. And I've also developed some more recent theses, and that would be related to AMC, I think. But yeah, let's look at some of the data. Over here, this is just my bookmarks watch list. And so what I like to do, I'm going to try to do it 2 days at once in case I missed the previous day. And let's see, we do have the 26th over here, so that's the correct day. What I like to look at is the data over here. See, does the net call or put premium really stand out? Like a lot of money behind the changes. We really didn't see that much for AMC, so that's one I'm not going to be paying too much attention to. But I did want to look at this contract, the $5 call that expires in January of 2027. And this is actually one that I have been adding more to my position because I think I like the thesis. I put out the video. Let's see if I can pull it up. Oh, and I need to pull up something on what am I looking at? The channel here. I need to I'll pull up something on GameStop, but I guess I'll do that when I get to covering GameStop. Yeah, let's see the videos that I put out over here. Let's see. Which one is it? This one, the big brain one. Chaos is a ladder. Only 86 views, but I kind of laid out this thesis of, kind of a nice way to trade AMC that could, be moving things around, creating a little bit of chaos for market makers and stuff. And, so that's this contract, $5 strike call that expires more than a year from now. And the thesis basically is that I think the price could go to 10. When it goes to 10, I could sell my shares and exercise as many of these calls as I want. And so that lowers risk for me. And then I can, hopefully accumulate some more shares and or just manage risk. Maybe share count decreases, but, it's all about managing risk. The next one on the list is going to be ASST. Both of these, AMC and ASST, I do hold. What we can see over here, net call premium, net put premium, not like $1 million, so nothing too crazy there. So this one doesn't really stand out to me. I know that Mike Alfred was posting about buying this on, I believe on Wednesday, when it was dipping to around, 106, I believe. I think he was posting, about buying there. And we see the low from Wednesday was, I think, 105. Yeah, he had some orders placed and was buying that. I'm actually going to remove those moving averages so they don't, make the axis so wonky. And yeah, so hopefully that's auto fit. And yeah, just kind of consolidating down here, very boring. I do have a small position in this, and I'll probably be adding to it. It's $1 a share, so it's very, I guess I should say it's $1.13 per share. So it's very, very cheap, easy to add to. And I guess I should maybe pull up the AMC chart. This is, looking at this on the linear scale, that's on the log scale. Yeah, I think I'm probably going to look at these on the log scale because then, we get a little bit more out of it. Like look at this ASST chart, we get a little bit more here than linear, just looks flat. So especially when stuff is volatile, good to be looking at it like this. And yeah, I think that this could be a very nice one to accumulate. And we do see that the 50-day simple moving average is at 169. So got one of our favorite numbers in there. But yeah, let's continue to look at the contracts. I don't really see anything too exciting about that one. Although this one contract, this is one that I do hold some of, which maybe I regret. I'm not sure. But this is the $2 strike call that expires in January, so about 49 days between now and expiration. And we did see a pretty big buy, it looks like, on the 24th. We saw a volume of about 18,000 contracts, which led to an increase of 11,000 contracts, going from 207 to 218,000 contracts open, just below it now after selling of around 413 contracts net selling. So that's interesting. That actually stands out to me. I should have been thinking more about that than just what's over here, because if I do adjust this to the 3 days, we'll see, net call premium over here was up by about 500,000 on that day. So yeah, that makes me think that maybe I should be a little bit more aggressive with it. Hey, what's up? And I see a couple people are watching, so happy Thanksgiving to you. Let me know if you do have a request or if something you want to say that you're thankful for. Yeah, just looking at AMC, seeing some accumulation here of the $3 strike call that expires in January. $20 strike call, also been seeing some increases in this one, but this one seems very risky to me, like it's going to be going to 0. And then the one that I am very interested in is the $5 strike call that expires in 2027. and that we actually saw some selling recently. But yeah, let's continue with the next one. That is going to be Backed Holdings, which I believe Mike Alfred is on the board of this company. And one that I've been watching, I don't hold, that is the $50 strike call that expires in March. And haven't really seen too much action on that one the past few days. If we look at the net call and put premium over here, doesn't really stand out as being too crazy, so I can probably skip on to the next one, but I might look over at the chart. Back to over here. And I can probably remove some of those fib levels just so the chart's not so cluttered. And it looks like this, on the log scale, potentially pulling back to this kind of wonky trend line that I had drawn there. Not sure if there's anything to that or if it's just hand wavy, whatnot. But yeah, I mean, right there, I think I can delete that older Fibonacci retracement. But yeah, from over here, 618's at about $16, did dip to a low on Friday, November 21st of 1335. And yeah, not quite getting down to 1167. Maybe we found a bottom. Maybe this is about to rip. We will have to see. But the next one on the list is going to be BMNR. This is, of course, Bitmine Immersion Technologies. And I might want to look at the Strategic Ethereum Reserve website so we can see what their position is. But I do believe they now hold 3% of the Ethereum supply. And we can see that on Wednesday, I saw this big drop in net put premium. And there's a decrease of about $4 million. So I'd say that's probably a little bit bullish. Drop in net put premium from being positive about $500,000 to being negative about 4.7 million, but then ending the day down about 4 million. So that could be suggesting that this has found a bottom. So let's look at the chart, but I guess before we do that, let's look over here at this contract, $65 strike call. It expires in January. I do not hold this one. It does seem like there has been some selling of it recently, but there's been some buying back following that. If we do look at the the Strategic Ethereum Reserve website, we can see that Bitmine has been buying recently, and now they hold, you can see it right in front of Ed there, Bitmine Immersion Technology. They now hold 3% of the supply, so that is pretty cool. That is, they're 3/5 of the way to their goal of 5% of the ETH supply. But yep, was looking at the contract over here. So let's flip over to the chart. And this, yeah, I guess we've pulled back to right around the 50%. Might extend this into the future. Say 315, somewhere around there. And I can probably, remove some of those levels. Pull back to the 50%, pierced it right there. So that could be suggesting the bottom is in. But yeah, I mean, this is one that I did hold. I sold some right around Halloween, around, I thought it was 40 something. So it might have been, it might have been right here. I think it opened on October 30th. I think I sold the few shares that I had, nothing too crazy. I do own some SBET, so I decided to not spread myself so thin. If this goes lower, maybe I can buy back lower, or I can just, consolidate my other positions, my portfolio, focus on the other positions. And so that's kind of what I've done, but I really like Tom Lee and Bitmine Immersion. I think that it's a very interesting business, and I believe in Ethereum. And so yeah, the next one over here is going to be Cypher. This is a $40 strike call that expires in January. I don't believe I hold this one. I do have some shares. Very small position. We can see that net call premium on Wednesday went up by $4.11 million. We do see some kind of gradual increases in this contract, that $40 strike call, with price right around 1944. If we do go over to the chart, It says that the chat is disconnected. Try to reconnect, and it did reconnect. But I don't see that anybody's tuning in, so no big deal. But yeah, Cypher's got a nice little bounce there. 50-day simple moving average is around 17, so maybe we pull back to that, find it as support before going higher. But yeah, this is one that I have a pretty small position in. I wish I was a little bit more aggressive here, but I kind of started buying more as it was coming down. And when it was at the bottom, I was not as aggressive as I could have been. I think the last price that I added at was $14. But yeah, this is another one of, let's see, Mike Alfred's positions. I did draw all of these lines over here. We did pierce 2 of them, hitting a low on the 21st, which was Friday, of 1309. So that's pretty cool. But yeah, I could see a pullback to around 17, test that before going higher. And with that being said, I think, crypto in general will be going higher. And then the next one over here is going to be for Ricardo if he's tuning in at some point. After the fact, I imagine everybody's enjoying time with their families, as they should be. But Jivo here, still could be forming that right shoulder, just dipping down a little bit lower. And this is on the log scale, so maybe I was drawing it before. Linear doesn't really change it too much, though. But yeah, that's getting pretty close to testing that 786 at around 177. But that is based on the low over here. If it does go below 177, I could expand that to over here, or, bigger picture over here. But yeah, I don't really know. I don't know this company that well. I do know, though, that it is below that 50-day simple moving average, which is around 218. Also, $2 psychological level, so do keep that in mind. I think that this could be coming down to around 159, retesting the lows over here, but maybe not. Take it all with a grain of salt. And I guess I should be noting which ones of these I'm, kind of excited about. And so I should note ASST. That is one that I'm interested in. Cypher, maybe around 17, I think. But yeah, let's look at some GameStop stuff, and I will pull up something I took a screenshot from my email that might be of interest. And let's see. So GameStop, net put premium came down on Wednesday by about $866,000. So that suggests selling of puts. That would be bullish or bottoming. And on, looks like the 24th, we saw a volume of around 2,400 contracts being traded, which led to an increase of 1,369 contracts, getting to right around 24,000, now just below that. Open interest, and that is the $25 strike call that expires in January, about 49 days between now and expiration, with price right around 21 to 22. This could be a little bit risky of a contract. We also do have the $30 strike call. It's going to be a little bit riskier to see increases in that open interest. I feel like this is getting more into the gambling territory, and especially with the $50 strike call increasing in open interest. But maybe that's suggesting we're going to be seeing some volatility to the upside. But what I'm more intrigued by, I guess, is really just to watch this $32 strike call that expires in January of 2028. So multiple years between now and expiration. We did see an increase of around $9,600 there, with total premium increasing by about $4 million. So that is pretty impressive there. Before I go to the chart, I did want to point out that GameStop is having some Black Friday holiday sales. And you can see that there is a buy two, get one free for all pre-owned games. And so get 25% off gameplay guarantees when you buy 3 or more pre-owned games. And then this next one here is one that I might be taking advantage of. Hey, Anon, what's up? How's it going? I will pull up ETHZ in a second. I'm just going to finish going over GameStop. And yeah, I will check that out for you. And happy Thanksgiving, by the way. Not sure if you're American or not, but either way, from the U.S. to wherever you are, happy Thanksgiving. And this is one that I think I will be taking advantage of. $35 sale on select games, including Battlefield 6, Borderlands 4, and Metal Gear Solid Delta, Snake Eater. And so I am potentially planning on getting a PS5 and streaming some gameplay. And so I will reveal some of that as it comes, but I am intrigued by the Metal Gear Solid $35 because the game normally goes for, I think, $70. So that's pretty intriguing. They also do have pre-owned Nintendo Switch OLED systems for only $200. And so there are also some other games that are $30 and under, like NBA 2K26, Spider-Man 2, both for the PS5. And there are also some Switch games, like this one, which looks like it's SpongeBob, I'm not sure, and then FIFA soccer game there. So very cool. And I'll just finish with the GameStop chart over here, and then I'll look over at ETHZ. And so this, yeah, I mean, I just did a video about it thinking that this is in the discount zone. And, Michael Burry's been talking about GameStop, posting about GameStop. And Jordy Visser, who I did a little short on, he is talking about how there could be some GameStop situations, kind of like in 2021, stock squeezing across the board. And so I think that could be very good for GameStop, AMC, others. And so I mean, I think that where we're at right now, basically below 25, I think it's dip buying territory, but just, good to, do that at a pace that works for you. But yeah, I'm just going to pull up Anon's comment, if I remember how to do that. So let's see if that pops up. Yeah, so Anon's saying, Andy, average down on ETHZ. Do I think it will come back? Yes, I think that, I can tell you I don't have an ETHZ position, but I can tell you real quick what I'm doing with Ethereum. And I actually forgot to pull this up at the beginning of the video. But yeah, this is kind of like my updated thesis that I had thought that we were testing these levels as support, but we clearly broke below them. And what I have kind of done, when we dipped below, let's see, a low of 2,600, I kind of started to prepare myself for, maybe Bitcoin's topped, maybe the crypto bull market's over, and all this is going to be pulling back. If that is the case, how do I prepare for that? And my thesis for that is I've just gotten a little bit less aggressive with Ethereum, also with Bitcoin. I could have been adding more to my Bitcoin position in the 80s, but I just stuck to my disciplined daily dollar cost averaging, didn't dip buy. Beyond that, Ethereum, I actually trimmed a very small amount. So basically what I've bought over the past week, I've trimmed. So I've net put in $0 to ETH over the past week, but I'm still holding basically the same position that I had prior to that, prior to the last Saturday for Crypto Corner Sat Stacker. And with that being said, I'm just chilling with ETH. I do have some limit sell orders placed on Doge just to trim, and some of the other ones that are a little bit more speculative. But generally, I am just going to try to be focusing more on stacking Solana because I don't have as much of that as I should. I should have more Solana than Doge, for example. And so I'm just taking advantage of the dip, but just doing that with Solana. And my belief is that if we do test like sub 2,800, that would be then below my average. And so I'd want to start more aggressively buying Ethereum, but I'm just going to wait until then. And if that doesn't happen, if we start to break out, then that's great. And I am not worried about it. You had mentioned, let's see, and Joe Bro, what's up? Happy Thanksgiving. I'll just pull that up and then I'll re-pull up Anon's comments. We can go over Isilla. But Joe Bro is saying happy Thanksgiving to you all. So everybody, whether you're watching, on the day of Thanksgiving, which is getting kind of late depending on the time zone that you're in, or if you're watching after the fact. I will probably re-release this stream, but as a video. because I've noticed that some other streamers do that. I think that it just improves the accessibility to the content as well as revenue from ads and whatnot, because YouTube doesn't really do that great of a job with ads on streaming as far as revenue goes. Most videos don't really make that much, but streams make pennies. So I'll probably re-release that. And so if you guys are catching this the day after Thanksgiving, if you're catching it on Black Friday, Joe Bro and we all wish you happy Thanksgiving, happy Black Friday, and happy holiday season. I think that it's going to be a pretty exciting one. So coming back to ETHzilla, if I do pull that up over here, it's not one that I look at too often. This is one that, and by too often, I mean I don't really look at it ever. If we do look over at the strategic reserve over here, we can see that ETHzilla is ranked number 9. I'll scroll up a little bit so you can see right there, ETHzilla, ticker symbol ETHZ. They are ranked number 9. Above them, you do have Coinbase and some like Ethereum Foundation. So if we do switch this over to just the treasuries, ETHzilla is ranked number 5. And I have to say that, I haven't been following ETHzilla, but I do follow Bitmine and SharpLink, the number 1 and number 2 here. And those have been disappointing. So like I said earlier, I exited my Bitmine position, not because I didn't like it, but I just wanted to manage risk. And because I was down on SharpLink Gaming, so then I could get out of my Bitmine position with some of that profit and roll it into SharpLink or other positions. So we do come over to the ETHzilla chart, and this is looking at it on the log scale. So if I'd switch over to linear, we just don't get much data out of this, because it's just so blown up there. So I'm going to switch over to the log chart and get a little bit more out of it. And if I do a Fibonacci retracement, just being kind of approximate from the bottom over here up to the top, we have broken below, it looks like. That's 786. So that's maybe not looking so great, but that could be, a dip buying opportunity, because if we do draw a little trend line, I was going to do it basically intersecting with like the close over here on Monday, July 7th, but I'm just going to kind of, hand wavy, intersect it with that wick, so it intersects with where price action was previously. So that would suggest that it could be at support. It could also not be. Maybe it needs to come a little bit lower, and that would be maybe coming down to like $8. It's around 1062, but I think that could be holding as support. We do have that trend line there, as you can see. And with that, if you just connect the lows over here, then it's like, anybody who draws that up there is saying, oh, well, it's at $10. It's at a discount, but I'd rather wait for it to come down to $8.45. If it doesn't come down to $8.45, those people get left behind. And really what should have been done is just draw a line there to suggest, oops, not so high, that, maybe this is at support. So I do think there's a little bit of hope there. We do have higher lows formed here. Higher lows as well here, but then it actually looks like it dips down to lower lows. So that is going to be a little bit of, that will be hidden bullish divergence, I believe. So it's not, that impressive, because it's not like a big difference or anything, but there could be some hope there that this is near a bottom. And so mentioning that about ETHzilla, I'm also going to pull up the SBET chart. Let's see, I don't want to scroll down that way. SBET is right here. So this one, I'm going to remove some of these levels just to clean that up. And I can remove the green one as well. So I will do that, the 50%. So it did pull back to right around the 618. And so from the lows there up to the highs, 618 is around $10, $11. Hit a low on the 21st of $8.76. Maybe it's holding support there, and then it starts to go up. But for me, I'm not really too worried about this one. I don't have too big of a position. It's just kind of like my hope to, get a little bit of leverage effectively on my ETH position. But really, it's only been leveraged to the downside. But if this does go back to, I don't know that it'd go back to the highs from like 2021 because it's kind of like a different business there, but it could. But like just the highs over here from May of 2025 for SBET, that's going to be around, $124. So if it goes up to there, I could trim out or exit my position. And my position on this one, let's see. Not exactly sure if you guys are curious, just so you have some context where I'm coming from. Don't really have big positions. I do notice right now that crypto seems like it's pulling back a little bit currently, but not too much. ETH is still above 3,000. But my SBET position, I've got 30 shares at $16 effectively. And I had a dip buy order placed at $9. And let's see, the low on November 21st was at $8.76. I think I had placed that $9 dip buy after. Like for this week, got a bounce. Maybe it's a dead cat bounce. So I'm going to leave my $9 dip buy order there. Ideally, it would be nice to accumulate 100 shares of this so I could sell covered call on a weekly basis, collect some premium on that. But yeah, I don't know if I would have been better off just stacking more ETH or doing something else, but I do kind of regret not being in Bitmine. I just feel more confident in it. And so, with that being said, we can kind of get a comparison between SBET and Bitmine. So here, just looking at like the same time frame, if I scroll up to look at Bitmine, we can see Bitmine only pulled back to the 50%, whereas SBET pulled back to the 618. Just going to pull Bitmine up again because, where did this, so this came from over here. So maybe it would be more fair for me to draw this from over here. No, then it would have pulled back even less. So yeah, locking that in place, leaving that alone. And the low over here does kind of, I believe, correspond with the lows from over here when SBET bottomed. So yeah, with that being said, Bitmine coming down to the 50%, SBET coming down to the 618, and ETHzilla, coming down to breaking below 786. So I think when you do go down this list, there's going to be more risk to the downside, but also there might be more reward to the upside. And so we can actually just do a quick comparison of those three. ETHzilla, so if it were to go back to the highs from August, so that's getting back to 175, and it doesn't have to, but from where it's at, and maybe this would actually be, I should pull up Anand's other comment, saying the average is 26. So 26, that's going to be right in here. And let's see. Yep, right around here. I think that it's definitely, not definitely, but if Bitcoin and Ethereum are to continue to new all-time highs, which I think seems likely, like I'm prepared for another leg lower, sweep the lows one last time before we start to rally. But kind of like the thesis that I like with Ethereum, with crypto, Bitcoin, is that uncles on Thanksgiving around the US, they're probably getting made fun of tonight. And those uncles are probably saying, BTFD, BTFD. And everybody at the table is laughing at them, telling them to go sit at the kiddie table. And, they're just laughing stock at Thanksgiving dinner. But a month from now, Christmas, they're going to come back. Bitcoin's going to be testing new all-time highs. ETH's going to be back above 4,000. Maybe not, probably not. But that uncle will say, see, I told you so. You should have listened to me. And then he'll feel all cool. Or maybe that'll come in the new year. Not really sure. But just to get back to these highs over here, which is going to be above the average of $26. And so going from, the lows up to there, that's a 1,600% move to the upside. getting to 26 about. That's around 160% move to the upside. I think that's feasible. But I would then just have, I guess, a plan for levels to maybe trim out at, just to like lower the risk if it wicks up and then comes back down, or if it wicks up and collapses, or if it just goes up steadily. I think it's good to trim to manage that risk. And so a level that I could see acting as some potential resistance is right around where the cursor is at, around $33 or maybe just like $30. And the reason for that is you do have that 50% Fibonacci retracement there right at 33.50. And then also on the left side of the screen, you can see where that dashed line, it nearly intersects with the highs from, it looks like, December of 2024. We had highs over here on December 24th, highs being $31.90. So between 30 and 34, let's say, I think there could be some resistance. So it might be good to like have a plan to trim there in case it does pull back some. One could either add back in or just to manage the risk to not be so exposed. And but also, I mean, this could be going up a lot, especially if Ethereum and Bitcoin are taking off. But yeah, I mean, like what I was saying, I believe that was 1,600% from, the lows over here to get back to those highs, about 1,600%. So let's now look at SBET to see the lows here to the highs there. That's going to be, about 1,200% move to the upside. So it's still a very nice move, but it's less than 1,600. So you're getting less risk to the downside, but also less moves to the upside with this. And and also just since we're talking about your average, my average being around 16. And it also with this, small position, I think I said, how many shares I should say I have 30 shares. And part of the reason why I have 30 shares of this is because I exited my BitMine position. But like from 16, I could see like 30 being some resistance, 38, 39, the top over here. So good to kind of prepare for that. But then if we do compare this to BitMine, the low over here to those highs, I wonder if that even is 1,000% move to the upside. That's about 500. So yeah, I mean, I think that the further down this list you go, the more risky it is, in that it's going to go down more potentially, but the moves to the upside could be more of a reward there. So yeah, I mean, I think that 26, it's probably just going to be hang out, wait and see what happens. But I think that could definitely be getting back to that level. So I wouldn't sweat it. I just, like for me, I don't have a super huge position, so I can very casually add on dips. And I, in all honesty, just do like one share at a time, unless I have a bunch of cash on the side that I might be a little more aggressive. But that would really be based on data from unusual whales. So let's just skip ahead here to SBET. I don't think I saw anything that stood out too much. We did see some net put premium increase a bunch on Tuesday. That went up by about $342,000, but then it did end up the day negative. So nothing really too crazy there. This contract that I'm looking at, which I do believe I hold, which I'm probably going to lose money on. Yep, my average for this contract, is 69 cents, and it's trading around 11 cents. The last time I bought this to attempt to get my average down, let's just see out of curiosity, was purchased on November 13th and 12th, and that was at 15 and 14 cents. Currently, this is trading a low past few days of 5 cents. So I could potentially be getting my average down, but at the same time, I could potentially be throwing away a good amount of money. And so I don't really want to do that. And I kind of recognize with options, I tend to do that where I just start with one contract and then I really add a bunch to it and price doesn't go up and it ends up being kind of a dud. So if I pull up the calculator here, If I've got 7 contracts at 69 cents per contract times 100 shares per contract is $69. So I'm risking just under 500 bucks there. That may very well be going to zero by January. So actually, this is kind of crazy. This is calculator. Oh, it doesn't expand. It's because it's just a little calculator. That's funny. And yeah, so I mean, maybe this is one that I should consider adding to, but the thing for me is I just don't see much in the data over here that's really saying this has indeed, oops, I want to do 2 days, has indeed found the bottom. So I am just waiting for that, I would say. And I accept that I might be losing 500 bucks. I'm probably going to be accepting some big losses in January when all those contracts expire, but that's the name of the game. It kind of sucks, but it is what it is. And so I do see another comment here. This is from Streamware. Oh no, I'm not gonna bring up any drama. Yeah, so I mean, people make mistakes in life, and so I'm not gonna judge people by past stuff. Yeah. So I mean that may be revealed in future things, but yeah, I don't want to bash somebody who's having a nice time. So I might actually, let's see. I might actually remove that comment just because I don't want to be creating drama for other people, and I'd rather be judging people based on, who they are moving forward, not who they've been. We've all made mistakes in the past. And yeah, so, and I think that's, kind of what Thanksgiving's all about too, is, being thankful for what you have moving forward. And I think that he's been given kind of a second chance. So that's been nice to see. But yeah, the next one on the list, IBIT. This is one that I did have. I do have some calls on that I had rolled into December that will probably be expiring worthless. It is what it is. And price needs to be up a lot higher on this for those to be making some money, but not a big deal. It's the name of the game. If we look at the contracts, I don't know if I have an IBIT. I do have some IBIT contracts here. None of them are expired. Oh, this one's expired. This one expired worthless. And this is one that I had. I rolled some of it to this other contract just because I could do it basically for not spending any money. It just gave me an extra month. But price needs to get to 135, and it is currently at around 50. So this is probably going to zero. What we do see is the net call and put premium going up, going down. Net put premium down by $12.5 million on Wednesday. And so that could be suggesting a bottom for IBIT. But this contract, not too much data here. It's very speculative, very risky. These are some other contracts. I believe Mike Alfred has talked about these. We did see a pretty big increase. Looks like on November 24th, a volume of 6,800 contracts, leading to an increase in open interest of 3.1 thousand, going from 38,500 to 41.7 thousand. So, yeah, that's potentially very bullish. These are 70, 80 cents per contract. And yeah, Mike Alfred did say that he was in this, the March expiration, $80 strike, as well as the $80 strike for May, which these are going to be a little bit more expensive, but you have a little bit more wiggle room. And but you do see, total premium over here, or let's see, open interest is what I'm thinking about, is 8,000, just over 8,000 open interest, whereas the other contract has over 41,000. So there's more liquidity here. So I think that there will be more opportunity to get in and out of positions and stuff. And yeah, so let's come back. Actually, not go back to the chart. Let's go on to the next one on the list. Iron. This is one I don't think I have over here, so I should probably add, since I do look at iron frequently. I don't hold any of it, but this is, a company that I wish I held. Mike Alfred talks about them all the time. And, I was thinking, it's a discount around 48, and it had dipped as low as 39.52 on Friday, November 21st. I did not dip by that. Just don't want to spread myself too thin. And, but I think that this one could be, getting to the triple digits. So I think it could be 2xing from here at least. If we do look at the contract data, puts going up over here by about $7.68 million, $7.68 million. And then over here, just, up by $1.1 million. This was Tuesday, this was Wednesday. And so that's suggesting that more downside could be happening. And if we do look at the chart, if this does go lower, I might be interested to get a bigger position, to establish a position more aggressively potentially. But if this does go higher, then I'd be cheering. We do have the 50-day simple moving average above us at 54.62. Pull up the other moving averages. We can see that the 100-day simple moving average, about 3-month moving average, is right around $38, and the 200-day simple moving average is around 24. I'm not saying I think it's going to go down there. I don't think it's necessarily going to go down there, but I think, if we do look at this, I've got my drawings up there. I don't have any drawings up on this, but if we just look over here, do a horizontal ray from the highs here, we can see that, around $25, when price did break above that, it retested it and then went higher. And so I could see iron, if I was thinking 48, around where it's at now, is a nice dip by level, but then it does continue to go lower. How could we think about this? We could just do a little Fibonacci retracement. And I have to say that, all the stuff that I'm doing here, Mike Alfred would refer to me as a kid analyst or a chart squiggler, I believe. And I totally accept that. And I would have to say I agree with him. He thinks about things more fundamentally on the longer term scale. And I could see this coming down to 30 to 25 potentially, but if not, it may have already tested support, that 236 there at $40.51. That being approximate, but it did test that, and so it could be going higher. But it also, if we do a little trend extension, could be coming lower. Like, the 100%, so that's basically just, let's see if I can just doodle it for you guys so you can see what I'm talking about from the top to the bottom there. And then just move that over to that moving average. That will be suggesting coming down to around $30 to $25. So there's a possibility there. Not saying it's going to happen. I don't think it's going to happen, but if it does, maybe that would be a really nice legendary dip buying level. Like, you didn't buy it over here. Well, that's okay. Maybe buying it over here is like buying it over there. Just, half a year later, buying the dip just a half a year later. So, yeah. All right. And so I might just continue down the list. Let's see, Mara. Net put premiums increased here by almost $1 million on Tuesday. Net put premium up. That suggests this could be coming a little bit lower. But I've actually seen some posts about Mara potentially looking like it's formed a bottom, looking like it could be looking pretty good. This is a contract I believe I held I did hold. I sold it though because I didn't necessarily think it could be coming to $50 a share by January. It's a $50 strike call expiring in January. Currently trading around 11 bucks. I wonder if there's another contract that I might be interested to consider, but let's first look at the chart and then maybe we could go back. Got a bunch of stuff drawn on this. Do you have this inverse head and shoulders pattern? I've gone over that a number of times and it looks like it's failed. Looks like it's broken down, so I'm going to delete that. And this is looking at this on the log scale we do have. Let's see. Sweeping the lows. So the lows over here on April 4th, 981. The low over here on the 21st of November, low of 971. So swept the lows over there. This is a lower low. We're also seeing a lower low in the RSI, but this is in the oversold territory, hitting lows of around 2147 as far as RSI goes. Did have higher lows, or from here to here and here, but now this is a lower low. Could be a fake out shakeout, could be going higher. I'm going to delete these trend lines because I don't think they're useful anymore. And this level here could be acting as some resistance. This one, delete that. This retracement, we've gone past it. This did not happen, so I'm going to delete it. And I like to only do this when I'm recording myself. And so that's what I'm doing now. That did play out, but it's, in the past, we can delete it. And up here, did not happen. So yeah, let's look at this on the linear scale. Maybe we could see, probably not, but maybe there's something there, but also maybe not. If I switch that to the log scale, actually maybe a little bit, sort of, I don't know, hopium. I delete that because I don't think that's really too much there. But yeah, this is very clearly oversold. And yep, this is looking at the log scale. But yeah, let's just look up, let's see, Mara. Let's look at some other contracts, some other ones, and consider, where price is at now and where Mara, the daily. Okay, yeah, I was like, well, this should go back further in time. But yeah, like the highs over here, it was 80, 2021. Yeah, okay, it's a time frame that we want. And so let's say, with it trading around 11, 20 is not too unreasonable. That's right around here. So let's say, price could potentially be getting up to, 50. But if we look at strikes that are 20, that's out of the money. If price does go up above 20, then that would give us the opportunity to exercise those calls when price is higher than 20. Buying shares at 20 would be a discount, or could just be holding them to consider doing that and then just take profits on the premium. I don't have any of these calls. I don't have any calls on Mara right now, but just kind of, going through that thought process. Here's a $20 call that expires in December, though, 21 days to expiration. That's too soon. I'll zoom in on this so we can see that a little bit better. And hey, Ricardo, what's up? Happy Thanksgiving. I did go over Gevo a little earlier. I didn't have too much to say about it, but I do think that it could potentially be coming down to 159, I think I said. So I just wanted to note that, and I need to switch over here. I'm trying to highlight. Ricardo saying happy Thanksgiving. So happy Thanksgiving to you as well. Thanks for joining. And and he also had the request of Gevo and Rocket. So I did go over Gevo, so you can rewind to check that out. And I will go over Rocket after going over potential, contracts. And Mara, that could be interesting to watch, not to buy, but to watch. Because this $50 call that I'm currently watching, way too risky, would not want to do it. But I do want to have something in my bookmarks just so I can easily access, all of the Mara data, the net call and put premium, and then look up other ones kind of easily like this. Yeah, if we do scroll down, we can see, let's see, I don't necessarily want the volume. I want high open interest. That's something that I want to see. This is puts. Don't necessarily want to filter. This is, okay, that's expiring too soon. The $25 call that expires in March. So I mean that, for example, right there is a more appealing contract to watch than a $50 strike call that expires in January, because A, I don't think prices go into $50, and B, by January. I mean, it could, but I don't think it is in that time frame. So that contract's going to go to 0, but it could go up to 25 with a longer time span, like to March. In these contracts, it looks like $27 to $34 per contract, because that's the cents times 100 shares per contract. So that's one potentially interesting to watch. We also have a $35 strike call. That's, again, less risky than the one that I'm talking about, which is the $50 strike call. So I might add that over there as well. And, just trying to look at stuff that expires later in the year. 40, still less risky than the 50, but it's too risky for me. For me to, even want to consider. Got some puts down here. Let's see. Yep, so those, other than that, they're not going to have that high of open interest. And with that being said, if I do compare these to the $50 one that expires in January, I'm just going to zoom back out. So there we go. Let's see. This one, has open interest of 39,000 contracts, whereas the 25, and this is a $50 call that expires in January, 5 cents, dirt cheap to get a contract, but very risky. But then this $25 call that expires in March, 27 to 34 cents, that's fine. But, for me, I'd kind of at this point, rather just be accumulating more shares. I don't have a big Mara position because I had a lot of calls earlier. I sold them at profit. Mara was actually very helpful for me in recognizing the top, and I kind of recognized it a little too late. Made some money with Mara, ended up losing some money with IBIT. Good lesson learned there, though. But for this one, I have 18 shares. Have a dip buy order placed at 969 just because, it's fun. It's a stupid number. But looking at the contracts here, it's like, well, maybe I'd want to, get some more shares or something. We could also look at the $35 strike call that expires in March. This says 30,000 open interest versus 32 for the $25 call. And that seems like 39 open interest. Yeah, so why wasn't I seeing this on the list there when I filter by open interest? It probably was 50. Yep, so that's bookmarked. Okay, you can see the ones that are bookmarked there. So that one's got a lot of open interest, but it seems very risky. It seems like gambling to me. And I feel like, 25 is one that's potentially interesting. A 30, it's much cheaper to buy. A $35 strike call expires in March, but yeah, I mean, let's see. Let's just look back at what this premium looks like. It's come down and flattened. So yeah, with that premium flattening there, maybe that's a bottom and this could be going up. Let's look at the past 7 days again for the other contract. Could be bottoming, could be going up. So yeah, I find these to be of interest, but I don't have any of them. I don't plan to buy any of them, but I will be looking at them if the data over here really starts to tell me that there's a bottom being formed over the past 14 days. Price going lower, but the net put premium not coming down with it, or the net call premium not going up doesn't tell me that the bottom's in necessarily. We do see it kind of flattening out. That could be suggesting that a bottom is in. Ricardo is saying, thanks about Jivo, so no problem. Ricardo is also following up, saying, funny how I just saw a commercial about Rocket while the stream is going on. Cool. Yeah, so maybe it's a sign. I don't, like, do I believe in signs? A little bit. I would not necessarily say that I believe in them, but I would say that I don't mind entertaining them. And, but yeah, let's come over to the chart here. Just looking at Mara. And we can look at RKT. Pull that up. This is looking at it on the log scale. And I got a lot of crap drawn there. So I might just delete this for a second just so we can kind of see. Got this consolidation band there. Doesn't really change if I look log or linear. I'm just going to keep it on log. I'm trying to do that. I think it's like a better practice. But we can see head and shoulders. Yeah, I mean, so this is actually taken off. This is performing well. It might be putting in a little bit of a top there. Big green candles with volume not being, too crazy. And so I could see it pulling back maybe to test the 50-day simple moving average, which is around $17.63, $17 to $18, somewhere around there. So maybe it pulls back to test that and then it goes higher. And that would also be, coming back to level that had previously been acting as some resistance. So I'm just going to delete that head and shoulders there. So yeah, I mean, I could see it doing something like that. And this is a very interesting play because it's like real estate, isn't it? And I believe, let's see, finance, rental, leasing. Yeah, right here you can see. So I think that's a very relevant kind of company. So yeah, I mean, you could also make the argument that this is an inverse head and shoulders pattern with that 50-day simple moving average acting as the neckline. So then a pullback and retest, that could be going, to new highs, getting into the 20s. So yeah, I don't think this one looks too bad at all. I do just think, though, that it could be pulling back to 1750, somewhere around there. So that's what I would look for. And I can actually just very easily, since you're here with us, Ricardo, just pull up Jivo. That inverse head and shoulders, it could be playing out. I mean, I could just move this. Oops, I don't want to do that. To, like that. Still, inverse head and shoulders. But that 159, I could see, I might actually delete the head and shoulders just because it, kind of clutters stuff, And I got that cup and handle that I drew there, so I might delete that as well just to clean it up a little. This trend line broke that. But yeah, I mean, it's still above the 786. It's around 177, but I think that like 159, that would be like a really nice, support level. Acted as the past as support, acted as support there when it was previously resistance. So I wouldn't be too surprised if Jivo and Rocket pulled back. But yeah, no problem, Ricardo. You are welcome. And then I'll come back to the chat. So Ricardo's just saying, thanks so much for going over Jivo again. Of course, happy to do it. Because you always requested, I just put it on my stonks list there, so it's pretty easy for me to access. And then Anon is saying, FISV, please. I think this has bottomed, and this is a good large cap. They just had bad quarter and cut guidance. Cool, yeah. I'll pull that up. And let's see, FISV. FISV. Pfizer. Okay, yeah, so let's see. How does this look? The linear. This look like, I mean, let's see. This, to me, I feel like you might be right. Maybe this has bottomed, but maybe the bottom is going to look like this. I don't know. It could. And to be honest, that's how I've seen many of the stocks. When they do gap down, what they end up doing is, and I think that this is kind of like a psychological game, they might consolidate in a little range for a little while, and they get people excited. Oh, it's going to come up and fill that gap. But then it doesn't quite get to fill the gap. And then it comes back down, gets back into the range. And so it just takes up a lot of time before finally getting back to fill the gap and then go higher. And so that gap will be right around 126. Looks like the close on October 28th was at $126.17. So I might mark that here. And I will lock that into place. They say 120, what did I say? 126.17. 126.17. So right there, because this is what I see happening, because, you might be right. It may have bottomed, but it might have like a spring over here or something before. And this is a total doodle, not to represent anything other than just kind of being in that range approximately and faking people out up here. But like it might be approximately at the bottom, but it could take maybe like a year before it actually has a meaningful breakout if it does happen. But it could be getting, a move up to here. And if that happens, like I would expect a rejection before filling the gap, just to be like playing games with people. That's like an 88% move to the upside. I think that there are other names that could potentially offer 2Xs in less time. But it also, I feel like a big part of this stuff is, having conviction in the stock. If it's just a chart, if it's not doing what you want it to, then it could be very tough to have conviction. But if it's a company you know and understand, it can be very easy to hold when it's tough, buy more when it's tough, and then to, wait this out. So yeah, I feel like it could be taking some time before it does do that, because, I don't know. I think it's just a very big gap down. And also, like, we have very short attention spans. All of us, we're all guilty of it. We want to see results very fast. And like, if I remove my drawings just to clean this up, we just look at this on the weekly time frame, only weeks. It's only spent like a month down here. And that's a pretty big move to the downside. Maybe this is going to be very, very hand wavy. Maybe there's something here with like support. I don't know. That suggests it's going a lot lower. So I don't know. That's probably very hand wavy. Not too useful. Yeah, let's just flip this over to the days and fast forward to current time. And just to kind of give you an example of how this, could be taking its time before it fills that gap, I think a perfect example is GameStop, where it gapped down, nearly filled the gap, and then it hit a new low. So it's like what you're talking about is like price being right here. And that could be at the approximate bottom. It could be the absolute bottom. But, like with GameStop, from the lows over here, there was like a 30% move to the upside. But now, I guess I could have just flipped that to be negative. 7.5 to the downside, but now it's basically back at that level. But yeah, that was a pullback from the top of around 28%. So yeah, I mean, I think it's kind of a waiting game. And then just to put this time frame into perspective, like GameStop, after having gaps down there, has been trading, in this range, not filling that gap for 170 days about. So that's about half a year. And so it could take, a full year to get up to fill that gap. So FISV could be a very good one, but it could also FISV could also be taking a lot of time to get up there. So that's all I have to say about that. I feel like this has not necessarily, it's like if it's formed a bottom, that's like, do you want to be patient on the front end or the back end? If you're going to be impatient on the front end, you're going to have to be very patient holding. If you want to be patient to see how this plays out over, I would say, months, maybe we could start to see this, form a trend over here. So it's like, let's say you buy 100 shares here and you want to wait to fill this gap. You could also just not buy 100 shares now, wait 6 months, buy 100 shares, and then sell up there. So, Anon is saying, wouldn't hold until 120. I'm just looking for a bounce to $80. Let's see, and $80 is right here. So I think that could be a very fine, legit trade. But what we do have is, maybe there's something here. We've seen lower lows in the stock price, but the RSI has been inching higher. And the RSI is like 18, so very oversold. So if you wanted to swing this up to the range up here, so let's just say the high here from October 29th, that was 76.65. So, I would say if you're going to be like firm and place a limit sell order at 80, maybe it gets filled, maybe it gets, goes past it. But maybe it doesn't quite get there because of the high over here. That's 76.65 is what I said. So I would say being like stubborn about 80, that might be being greedy because, like up here, even where I've doodled that, that goes up to 80, but maybe it, gets up to this line, but then gets rejected, kind of like over here, pulls back, and then goes up to 80. So, I would say maybe consider lowering the target to like 75, because then that's lower than the previous high over here after this gap down. And I feel like that there's probably going to be some selling pressure there. So 75 to 80, I think that's a fine trade. And let's say that could be taking place over the next, let's say 1 to 2 months. I think that's feasible. And that's a 26% swing. So I think that could work out. But I just wouldn't be super greedy with the 80 because I'd, be keeping an eye on, are there big wicks to the upside, suggesting rejection, and the moves aren't really backed by volume. And then that could be a top. So if you start to see that getting into the 70s, then maybe it's not actually going to get to 80. And so there might not be a fill right at that level. So I think that seems totally fine. And if this is one that you like follow the company, you follow the chart, you could, swing it up to here. Once it gets up there, sell, and then just set an alert back to wherever the bottom was, around 60. Pulls back. Okay, then you buy back the shares, wait for it to go up, trim again. If it goes higher, that's fine. And then, maybe you could get some, to be honest, I don't know how to short stocks, but you could get some puts up here or something. If it nearly gets to that gap, ride it down, comes back to down here, ride it up once more, or maybe twice more. But I think that it sounds like you got a good thesis there to swing it. So over the next 1 to 2 months could really work out. But if this just starts to continue to bleed lower, um, yeah, and I was actually watching this video from Cantonese Cat about stop losses and all these different things about the market, and how stop losses were really designed for people that it's like, well, if you can't bear the pain, have a stop loss, and then you won't have to hold it to go any lower. But basically how our psychology works, we end up placing our stop losses at the bottom. And then so bigger firms or whatever could then jump in, buy there, and then you sell at the bottom, they buy at the bottom. And yeah, but I mean, this could be one to have a stop loss. I don't know, whatever would be a good risk to reward for you. But that could be, I mean, I don't really do this too often. And so I think this is kind of like good practice for me, not patterns. I think, where do I see them? Okay, yeah, long position right here. So let's say, we want a risk of, let's say, 10% to the downside. And the reward getting up to around 80, 26, somewhere around there. And so that stop loss could be around $6. Wait, sorry, not $6. That would be a change of $6, which would be at around 55, 54, somewhere around there. But yeah, I mean, that could be like a nice trade with some risk management. And I can extend that to over here where my doodle is. And we can adjust the details of that. So like the profit level, okay, that's the time frame. And so let's say that's 80. Let's put it up to 80. Or let's do 76. And let's do 55. So, yeah, I mean, I think that could be a very nice way to manage risk with a trade like that. But stop loss could also be, at the bottom. And let's see, we've got some more in the chat. So this is from Nicole. Why is it very profitable to sell old crypto wallets? Oh, I don't know about that. So I'm actually not going to pull that up. And so that seems like it might be some spam. If it's not, I apologize. But I feel like whenever a wallet is mentioned, I don't like it. So I'm just going to remove that from the chat. Sorry about that, Nicole. If you had good intentions, just don't want to throw people off. But yeah, I'm just going to continue on. And actually, yeah, I mean, it's only 9:30 here, so I might continue on a little bit longer. Let's look at MicroStrategy. This one's really come down a lot. And this is actually very interesting. Does look like maybe it's come into some support over here. Right around there, around 175. Yeah, Ricardo's saying, yeah, that one look like spam. I'm not the best at pulling up these chats. And also Ricardo had said, heart eyes and thank you and no problem about that Jivo stuff before. But yeah, one of the things that I recently discovered in kind of engaging more with a chat like this is that I can hide comments, stuff like that. And actually, I mentioned this in the earlier thank you video, that somebody had said that I think too much. That's actually a very offensive thing to say to somebody, in my view, because I have been told that I think too much. And I think that might actually be because of, slight autism or Asperger's. I prefer Asperger's, but that's like not PC. But that's a little clearer for me. But yeah, I think that explains why I like zoning in on the charts, why I really like explaining stuff. And yeah, one of the outcomes of that. I have tough socializing. I've noticed that a lot over the past year. And doing this is different. It's not overwhelming. But like at work, if I'm working with one person, I'm good. But sometimes being around a lot of people, it's just like I'm not good at that, and I think that's part of it. And it's because I spend a lot of time thinking, and I don't think there's anything wrong with that. And that that's really like kind of the gift that we have as humans is our ability to think and process things. And I suspect that it's not because of Tylenol or anything like that. I feel like it's because of all the technology that we have, the internet, the phones, the access to all of this information, and the way social media really taps into, our dopamine need for dopamine and all of that. And I feel like that's really just kind of, we think a little bit differently now. So I feel like it's something that's not so uncommon anymore. And I feel like it's really just because of our exposure to all of this information. And Ricardo's saying, it's good that you zone into charts. I love watching the TA. Well, I'm glad you do. And Link, I will definitely follow up on Link. I'll probably just save that for Saturday for Crypto Corner Sat Stacker. I guess I can look at it real quick here, but I do want to just finish going over MicroStrategy because I think I am watching one of the contracts now. But I will pull up Link in just a second. I'll leave your chat there just to remind me. But yeah, MicroStrategy. I do not plan on buying this. Definitely, I don't like to spend hundreds of dollars on contracts, especially when I already have a lot of exposure to crypto and other crypto-related stocks. But MicroStrategy, this is the $300 strike call that expires in January. Kind of risky with price trading. Let's see, around 177. I think it dipped to around 169, and that's kind of a fun level. But yeah, I mean, this isn't necessarily telling me that a bottom's in. We do have net put premium going up a lot by almost $12 million. And let's, I was going to zoom in on just that day, but I'd have to open up another window. I'm not going to do that. But yeah, net put premium up $12 million on Tuesday, but then it came down a little bit. This is not necessarily telling me that the bottom's in, but I could see it starting to form a bottom. But yeah, not trying to overexpose myself to crypto because I've already done that. But speaking of which, let's flip over to Link real quick, just because I've got it. It's one of the ones I cover on a weekly basis, but I don't always. I got all of this crap up here, and so I might just remove my drawings just to kind of see. I mean, I think that so across the board, like what I'm thinking about with crypto, and that's like all the ones that are over here, I cover them to some extent, some of them in more detail than others, but I kind of want to redraw a lot of the levels just because I got too much stuff going on there and it's not, breaking out. But I'll do that on Saturday. But I mean, kind of my thesis with crypto is I do $10 daily DCAs with Bitcoin, very boring. I wanted to buy more aggressively in the low 80s, but because I do these weekly Crypto Corner Sat Stackers, I said, no, I'm going to wait for Saturday and I'll buy. And when I was recording on Saturday, it was below 85. And I was like, well, I'll place a buy order at 84. That did not get filled. I didn't chase. It's now in the 90s for Bitcoin. And that's totally fine because for my goal for Bitcoin for 2025, I've hit that goal. I actually hit it a couple months ago, I believe. And so I'm not too worried about that. And Ethereum, I have a good amount of it. It's my second largest holding. And I will buy if it goes below my average. And if it doesn't, that's fine. And I'm not really going to trim. I trimmed a little bit this week. I bought $40 worth and I sold $40 worth. So I didn't expose myself to more risk with Ethereum over the past week. But if it breaks below my average, which is 2,800, then I would buy more. If it doesn't, then I'll be happy about that. The one that I have been buying more aggressively is Solana because this is like the order that I hold them. And I think I should hold more Solana than Dogecoin. And so I'm trying to buy Solana more aggressively, get it above, these very speculative coins here. And so that's what I'm currently working on. As far as Link, I do hold it, and I think that Link is going to be a really good performer long term. I think the technology's there. I think Sergey, the co-founder, I believe is his title. It might be CEO, but I think it's co-founder. I think that he's a great advocate for not only Chainlink, but other chains, but other contracts or coins. And I think that he's like a real champion for the industry as a whole, not just for Chainlink. I think that he's talked about partnerships with Aave and I believe others. I think maybe Ondo as well. I'm not sure. But yeah, I mean, I think Chainlink's going to be a winner. I would like to hold more of it, but at the same time, I'm trying not to spread myself so thin, and so I'm really just kind of focusing on getting Solana higher up on my list. But what we can see, if I do remove the drawing, so there's less clutter, we do have higher lows, and so that's good. Even if we sweep the lows from over here, I mean, I think that's $11. It's currently at 13. I think that in 2026, this could be coming back to, I guess, the all-time highs, which was around 50. So yeah, I mean, I have a smaller position in this, in Link. And I will probably start to trim it when it gets above my average, because then it's like if it goes above my average, I can trim a little out. And then if it dips below my average, then I can trim a little bit back in. If it goes a lot above my average, that might be getting into euphoria, and then I should more aggressively take profits. But if this does break down more, if it really starts to go lower, I've kind of put a stop to a lot of my alt buying, which is basically everything on this list. So I'm buying more Solana. And then at the bottom of the list here, Pengu and Arbitrum, I'm doing about $1 a day with them. I actually did buy my last dollar's worth of Pengu because I have a total of a risk of $200 effectively with Pengu. A very small amount, not a huge amount of money. But that's now, whole $100 number. But now I want to get Arbitrum above Pepe and Trump because those are kind of, silly meme coins. Arbitrum should be above those. I think Pengu has a stronger community and culture globally, especially in Asia. And I feel like there's a lot of value in that. I want that to be above Trump and Pepe. But I first want to get Arbitrum above them. So I'm doing the dollar cost averaging with Arbitrum, stopping with Pengu. And so that's really it. So it's basically like moving forward, I'll just do like $1 a day for Arbitrum. And then if it dips to whatever level, I'll do an additional $7. And that's just going to be on a weekly basis. I'll reevaluate every week. And with Solana, for example, I'm doing $14.28 a day, which ends up being about $100 a week. And I'm going to up that a little bit because I accidentally bought an additional $14.29 a couple days ago because my order went through later than it usually does, and I thought that it was skipped for the day, so I bought. But, buying at the lows, so I think it's good. So, yeah, I mean, I think that Chainlink is going to be a winner. I think that, like, on this list, ones that I have confidence in lasting the long term, Bitcoin, Ethereum. I think that Dogecoin is a very interesting meme coin because it's its own chain. It's not on Solana or Ethereum. It's its own chain. So I find that to be really interesting in it, that it's kind of like a little brother to Litecoin. And so I think that has some longevity to it. I think it has utility. I also think it has a lot of community. And then Solana, I feel like, is kind of like, if Ethereum is the Coca-Cola, Solana is the Pepsi. And, we live in a world where we have the choice between Coca-Cola and Pepsi. There's also RC Cola and, whatever else. And so I think that both are going to survive. And Solana's market cap, if we just look at that, it's behind me so you can't see it, but I'm just going to read the market cap. $78 billion, or just under $78 billion, whereas Ethereum, also from Coinbase data, has a market cap of 362. So, there's definitely room for like Solana to double, to triple, to quadruple within, so let's actually just pull up the calculator so I'm not just, because I suck at mental math. But, for Solana at 78 billion, actually, well, let's multiply that by 4. That's 312 billion. And so that would be effectively the market cap, or lower than the market cap of Ethereum right now, which is around 363, just lower than that. And so I think that Solana has a lot of potential to go to the upside. And let's also consider Chainlink, since that's what you asked about. I'm just going to pull up their market cap, which is around 9 billion. And so let's say Solana gets up to ETH's, right around ETH's market cap. Let's say Link gets up to Solana's market cap. So Solana's market cap, I said, is 78 billion. Link's is about 9 billion. So let's say 9 billion. And let's just do times 4. So it's similar to Solana going to ETH. Multiply that by 4. That's 36 billion. Whereas Solana has a 78 billion market cap. So I think that there's potential for, like Solana to quadruple. I think that Link potentially has the ability, the potential to quadruple, to multiply by 8 to get up to like Solana's market cap. But that could be over the next 4 years or so. But yeah, I think that Link, Avalanche, Cardano, I think that those are going to be survivors. XRP, I think so, but I also think that there's a lot of interest in it because it's, top 3 or 4 as far as market cap goes. Maybe they're 5 right now if BNB's still up there. But I think that retail sees this and it's like, oh, Bitcoin's over 100 or around 100,000. That's too expensive. Ethereum's over 1,000. That's too expensive. XRP, that's around $2. I'll buy that. And so I don't like XRP as much as the other ones. But yeah, I like Litecoin, in all honesty, more than XRP because they've got a fun account on X. You got to have fun doing this. And the Ricardo's got the hang loose there. So you're welcome for going over Link there. And I might scroll up here. And I might just stream for about another 15 minutes or so. Because then that puts me at about a 2-hour stream. And then tomorrow I'll probably edit this into little bits. So it's a little bit more accessible to people. But yeah, since we just covered MicroStrategy, let's go over Neo now. I did just cover this recently, so I'm not really going to spend any time on it here. I think that this is going to be coming down to sub 5. And it does look like the low on Wednesday was 530, so it's getting pretty close to 5. People were laughing at me up here, telling me I'm an idiot, all this stuff. I was right. And those people are crying now. And I told them not to do it. But if we do look over at this contract, this is a $10 strike call that expires in June. This is a contract that I did hold, but I thought that, the top seemed pretty clear to me. So I will get out of this. And I'm glad I did because my average was, I believe, 32 cents. And the low on Wednesday was 30 cents, average 32 cents. See some calls selling here is what it looks like. We have seen this contract increasing in open interest, so maybe that's, maybe it's bottoming soon. I don't know. If we look over the past 14 days, lower lows, so maybe it's bottoming, but maybe it's just going to continue to put in more lows. And then if we go on to the next one, open, this is one I'm very, very proud of because people were talking about it a bunch over here, I believe, and I resisted. And then it, started to consolidate here, and so I just waited. And I started to hear people like Anthony Pompliano talking about it. Started to hear people like Mike Alfred talking about it. And I started to recognize, hey, and this is also related to real estate, maybe there's something here. And so I put out a video when I thought it was bottoming here, broke out, but I said, I'm going to wait for it to come back to 6. It did come back to 6. I was going to it's very small. Please don't make fun of me, but it's just, it's effectively like paper trading, but with some actual exposure. I was going to buy 10 shares at $6, so risking $60. But instead I just bought one. Not that fun, but yeah, I mean, if it does come back down to 6, then maybe I have more cash on the side where I can add more, or because I'm starting to ease off on crypto a little bit, maybe I can have some more cash on the side for stocks and I can accumulate some open when it's back in this range, thinking that it could be getting up to wherever it is up here. I just like $14. So yeah, I mean, I think that looks really nice, but the stock market likes to play with us, just like a cat playing with a mouse, and it likes to take its time with us, make us think it's breaking out, but it's just a fake out, break back in to test the middle of that range before maybe breaking out, but maybe getting rejected by that 50 SMA, which is at 783. So we will have to see. But we can also look at some contracts over here that I have been watching. We do have the $10 strike call that expires in January. And I don't have any of these, but we can, look at them to see if they're interesting. We do see the net call premium over here on Wednesday. It did increase up to about $1.23 million. Maybe you could think of that as good luck. It says 123. But I'm only saying that just to point it out, and not because I think there's any meaning to it. It's just fun when the numbers, have patterns in them. But yeah, I mean, I don't know how significant any of this is. If we go back the past 14 days here, let's see. Yeah, I mean, I don't know. Doesn't really stand out as being super, super crazy with the net call premium and stuff. With this contract, the $10 strike call that expires in January with price around, sub 8. We do see some increase in open interest, net increase, but from Tuesday into Wednesday, we did see a decrease. We can also look at the $10 strike call that expires in February, and this has seen nothing but increasing open interest, and it's about $1 or $100 per contract. So this one could be of more interest, and that's also like $6. Maybe I just want to wait. And so I have one share, so I got my eye on it. Now that I'm watching it more, now that I have a share, I'm invested in it. I'm looking at these other contracts, and maybe I start to see some data over here. Hey, it looks like there might be a bottom. The open interest on this contract's increasing a lot. Maybe it's going to be breaking out soon. Or maybe looking at the chart, this is not a fake out breakout. We're going to see a bull flag and then a continuation. But I'm not necessarily seeing that just yet. But this could be a nice contract to add to. And that does, again, expire in February. That's the $10 strike call. We also have the $9 strike call, this one that expires in May. About $200 or $2 per contract times 100 shares per contract is $200 per contract. It says, did I say $2 times 100 shares per contract is $200. So it's a little bit more pricey, but it's a lower strike at $9, so there's less risk there. Also, you got more time between now and expiration, 168 days, so less risk there as well. So you're paying for that decrease in risk. But then another contract, this one's going to be more risky, is the $15 strike call, also expiring in May. This did not see so much open interest increasing, but you see that it's only about $1 per contract, so that's a little bit more appealing. The open interest, let's just look at the open interest here. It's like 1.5 thousand. This is 2.6 thousand. I mean, I say of these, the one that I'm probably most interested in is either going to be the $10 strike call that expires in February or the $9 strike call that expires in May. This is the 15. I'm not as interested in that just because you don't see as much increasing in the open interest. Whereas you see, 1,000, went from 43 open interest contracts open on the 21st to 1,200 on the 24th. So that makes me think that we saw a bottom on the 21st with open. So very neat. And let's see, still got 3 people in the watching. And so you're welcome to, actually, I don't know if I'm going to get too many more requests, if there are any requests. I'll probably just continue on with the list. I had already covered SBET, so I might go over to plug here. This one, I know people want me to do a follow-up on. Had more of this then that I've had today. But yeah, I need to make a more proper video. But this could be a bear flag. But at the same time, I had talked about, and this is kind of like the thesis of, if I were to put a stop loss here, I actually think price is going to sweep that low that would stop me out. So rather than putting a stop loss there and buying shares right now, I'm just going to put an alert there. And when that alert goes off, then maybe I'll consider buying. And so that's what I did with Plug Power. I only have 3 shares, so I'm effectively paper trading. But I wanted to see it with the stop loss and see how that works. So I was eyeing this level of 189. And it came down to a low on the 19th of 170. I believe that's raising some funds or something like that following earnings. And it did come down to a low of 170. And so now I think I've got a stop loss for my 3 shares at 166. And so we'll see. Maybe what happens is let's get that here. Maybe it goes up like this and then I don't sell and then it comes back down, sweeps me, and then it goes back up. Maybe that's what happens. Maybe that's not. But yeah, I just thought I'd have fun with that to kind of experiment more with stop loss. But I do believe I have a contract over here that we can look at. This is the $5 strike call that expires in June, 200 days between now and expiration. Not much change in open interest, but that's around 33,000. So that's a good amount. We actually did see it up at like 51,500, but that's dropped down to, now 33,000. So that's not a good sign. As far as the premium, over here, hasn't been that exceptional. So I'd say it might be, it could be going lower, so I might be getting stopped out, but that's kind of why I wanted to see with very small positions, see what plays out. And we can go with Snap. Snap was requested, so I'll probably be doing a follow-up video on that over the weekend. And actually, I want to make sure that I deleted that drawing that I put there with plug. Yeah, but Snap. I'll have to clean this up, do another video on it. But yeah, let's look at some of the contracts. This is one I hold. I did have the $8 in November strike, which I rolled into this one, which was a mistake. I could have taken some profits on the November contract, but I didn't. And I rolled them into this $10 strike call. But now the value's gone down a lot. It's 8 to 10 cents is the range from the 26th on Wednesday. And so that's $8 to $10 per contract. And so this one might be a dud. Let's see how many of the contracts I hold. I have 14 of them at an average price of 37. And actually, my average price is not 37 because I rolled from the other one. And actually, let's see, I forgot to close my email. And that could pop up. Always dangerous to not close windows before a stream. But yeah, I don't think I'm going to pull that up. But let's see, what was I? I was going to pull up the calculator to do some math. I think my average is 64 cents, and I have 14 of them. And I should have just done 64 because I'm going to multiply that by 100. So I'm risking $900 there. that could be going to zero. You know, it kind of sucks, but this is part of the learning process. I do have some shares in Snap. And so it's like, well, you know, I should just stick with shares and then wait until there are lots of signals that are saying, hey, this is looking like it's looking good. Then get some contracts. But yeah, no bottoming signs just yet. So, you know, we will see. But this is still, you know, higher lows. It is below the 50-day simple moving average. Maybe we put up the other moving averages. No, they're all kind of consolidating. They're right around 8. And then it looks like the 200-day simple moving average is around 850. So lots of resistance there. And if I do switch this over to the linear, yeah, I think the log looks a little bit nicer. But yeah, that one might be a dud. Tesla, I love, you know. For me, I have a very small position. But if it comes down to like 370, that's where I'd want to start adding. My average, I think, is around 250. But the lows over here on Friday, November 14th, 282.78. So if it goes a little bit lower, I'd start to add a little bit. I don't have any contracts to pull up for Tesla because I don't really pay attention too much to it because I'm just like happy with what I hold. Unity Software could be an inverse head and shoulders here. Roaring Rico, aka Free Wyckoffs, has talked a lot about this coming down to 32. I had done a video about you know, contract being sold. Let's see over here. Not this contract. This one's been accumulating. $45 strike call. Looks like $2 million. Let's see how much went into that one. $45 strike call expiring in January. So we saw an increase of about 9,000. So let's see, 8896 times the average from that previous day. 256. Let's just multiply that by 100, get it out of the way. That's about $2.2 million. And so we see that, you know, right here, a lot of that going long. So that's a bullish bet on Unity. And let's see, this next one is the $60 strike call. This one actually had some selling around that same time. So there might have been, or a little bit before, so there might have been some rolling, moving contracts around. 60, I think I had swung this contract previously, or maybe it was 65. I think it was actually 65. These are going to be too risky in my view at this point. Looking out further dated, this is the $40 strike call that expires in March. This is in the money, $800 per contract, too expensive for me. We also do have the $65 strike call. This one expires in December of 2027. And we don't see much over here, although we did see this increase of, it looks like, you know, volume at 3,000, and then that basically going into the open interest and holding. $65 strike call. That was at, you know, basically it's a $1,100 per one of those contracts. That's pretty expensive. And if we do expand this back, what date was that? November 6th. We could just go back like 30 days and we could see that spike there. And that could be somebody selling. Would they sell covered calls? I mean, yeah, they could have sold covered calls. And it's just like, you know, they're happy to exit if it does, you know, close at 65. So that to me seems like, if we look over here, 30 days, we could see that. Yep, that does seem like it was selling. That would have been on the 5th of November. Scroll down here, we see the volume on the 5th and the change on the 6th, the day after. So that makes a lot of sense. As selling cash, or sorry, not selling cash secured puts, selling covered calls. And that's saying, you know, if it's above 65 on December 17th of 2027, then they'll sell all of their shares And if not, then, it's fine too. We got one more. I'm going to do one more comment and one more chat. This is from Anon. And this is on PayPal. So yeah, let's look over at the PayPal chart, saying it looks interesting. And then I'm going to end the stream. I've been doing this for just a few seconds away from 2 hours. But yeah, let's look up PayPal, PYPL. They're very interesting. They have the PayPal stable coins, stuff like that. This one, I mean, to me, what makes me a little concerned about this volume has been coming down as it's been going up a little bit. So maybe it could be pulling back. This does have higher lows, also higher lows at the RSI. It was recently in the over sold territory. That was RSI of 28.19, so below 30 is oversold. It did bounce. It could be a dead cat bounce, though. I'm not sure. Looking at this on the linear, doesn't really change on this time frame. This could also be, a head and shoulders, but it could also just look like that and not be. I mean, because you could have something. There's a trend line there. Or maybe if I do it like this. I don't know. Maybe it's, going to consolidate for a little while and then break out. Let's see what options data we've got for PayPal. And so I might just look at this. And it looks like the most open interest, $100 strike call, has 38,000 contracts open. The price is at 60, so this is pretty well out of the money. I think that could be expiring worthless. What have we seen? Changes, pretty big changes in open interest. Increases over here, some calls and puts. And those are, coming up. So that's probably why. These are, December. So let's see, February. This one's potentially interesting because it's months away. And it's had a big change in open interest. Although the open interest in general, 42. So it's increased by about. So let's just look at that over here. It may not stay up here on my list, but yeah, look at that. Big spike there recently. $70 strike call for February. That's out of the money. And looking at this, we do see a big increase in net put premium by about $2 million. That's potentially bearish. We step back 14 days. Maybe this is bottoming. Look over here, 14 days. Maybe this is bottoming. That right there, this is just from 2 days ago, so I don't really need to. I think if I go 3 days back, go 7 days back. Yep, that stands out as, this big candle right here. So we just need to look at it on the 2-day time frame. And we can see that one. That looked like it was buying because not 2 days ago. So on Tuesday, the 25th, volume of 2,450 contracts, which led to an increase in open interest of about 1,600. Going from around 2,600 contracts open to around 4,200 open now. And so that suggests that this could be bottoming. So yeah, I would agree that PayPal does look interesting. But this is for February, so it's, like 3 months down the road. And 70 kind of corresponds with, this 50-day simple moving average. So I could see a move up to 70 or right around there, but maybe a rejection. So that could be a nice short-term play. Whether it's the 70 strike call, that could be closing in the money, but it could not be worth much more money. It's, because each dollar here is effectively like adding to the strike. So this is $70 strike. This at a premium of $2 is, you're putting $200 now for exposure to 100 shares, that you would have the option to buy 100 shares at $70 per share. And so if you buy 100 shares at $70 while having also spent about $200 on premium, you're effectively buying 100 shares at $72. But looking at the chart, if there is a moving average there, $67, it's probably going to be some resistance there. So I could see swinging this on the way up to 70, but then it getting rejected, taking profits there, and or just holding some shares up to around 67 or 70, somewhere around there. And earnings coming up though approximately on it looks like February 11th is the approximate date. But yeah, that's not scheduled. But yeah, with all that being said, I think I'm gonna not head to bed, but end the stream. Just feeling a little bit tired and been doing this for about 2 hours. So yeah, hopefully that was helpful for you guys. I didn't get to UAMI or the UVIX on my list here. UVIX I don't think is really that important, and UAMI or any rare earth elements, mining, processing, whatever. I think that those are probably going to be good opportunities into the new year. But yeah. And I might actually, I don't know if I'll follow. Yeah, I mean, if you want me to follow up on PayPal, I will. So let me know in the comments. But I'm probably not going to add it to the list here just to kind of keep the clutter down. Excuse me. But yeah, thank you all so much for hanging out. Happy Thanksgiving to everybody. Ricardo is saying, last chat, thanks. Enjoy the rest of your night. You as well. Sorry if people didn't get to read that. I popped it up. Thanks. Enjoy the rest of your night, everybody. And yeah, I'm just going to throw this up here. If you haven't already, please make sure you like the stream, like the videos, subscribe if you want more content like this. And I'll probably release clips from this tomorrow. And I'll plan on doing over the weekend. I know you guys want a Snapchat follow-up. I might do a Plug Power follow-up. Maybe not, though. I'm not sure. We'll see. I just like to wait until I see data that really stands out. So whatever I cover, I'll probably do it just based on what I see in the data. Because I get excited about it, and I think I give you guys more information. If I do a video on something and there's no exciting new information, I don't really think it's that valuable. And then like the next day, if interesting data comes out, I won't want to do a follow-up because I already did a video on it. But yeah, thank you all so much. And I'm going to be switching my schedule at work to be working days. So I got to be at work early in the morning. So if I do stream Sunday, it will probably not be too long. It'll probably be at most an hour. But yeah, have a great rest of your night. If you're off tomorrow, as I am, I hope you enjoy your day. Markets open for half of the day. Hope you enjoy your long weekends, and I'll see you in the next one. Okay, bye guys.